Welcome back, Alpha Hunters. The markets are closed for the week of October the 20th. Hard to believe that there is only 7 trading days left in the month of October. This year is flying by. It's almost over. So let's take a look at what went on this week. The market was so enthused that the world did not end last weekend that we actually had a gap up. We gapped up a little bit. Nice little run the first hour and a half of the day. Nothing crazy, and just kind of settle into a nice little sideways action there for the rest of the day there on Monday. Not too much craziness kind of went on for the rest of the day. Tuesday, nice gap down. Traded sideways first 30 minutes, then we just kind of ripped here for about 2.5, 3 hours. And that point right there at the high on Tuesday, kind of mentioned it last week. Watch out for this happening. And I'll take a look at this along with yields a little bit later when I look at yields. And I set up a very nice 9x trade bearish for this Friday, and it was perfect. So very nice. And then, yeah, that was basically the high of the week. Just kind of rolled over there, went sideways. A little bit of a pop there at the end of the day on Tuesday. Wednesday, nice little gap down. And then nice little sideways, very choppy action right there to start the day on Wednesday. And, kind of just very choppily broke down. People were still trying to buy the dip. And then anytime they bought the dip, it just kind of slowly faded back down. And basically kind of ended down there on the lows of the day. That last 15 minutes there was a pretty quick drop and bounce action. You can just kind of see that little lower wick there. Thursday, nice little gap up, traded sideways a little bit, a little drop. And this is when Jerome Powell was going to be talking on Thursday, but then we went a little bullish into Jerome Powell press conference speech deal, and got a little squirrely here for a little while. And, there for an hour, it was just like up, down, down, up, down, left, select, start, BA, all that stuff. It was kind of nuts. It was just all over the place. But then we got this last little pump here, and then it just slowly faded it, and that was it. It just broke and never really could recover. Bulls just didn't have any more in it. So kind of basically just ended at the session lows there on Thursday, and then Friday just came out a little bit of a gap down from the close there on Thursday, and it just continued. We just continued to push lower in the first hour and a half, and then had a nice little midday rally. Not really a rally. It was really kind of more of resting because we just got off of like 2.5 days basically of bearishness. So we had a nice little flag pattern here set up here, and then the afternoon session when I got on the live stream about right here, I said, hey, I wouldn't be looking to be bullish here. I know the market's trending that way, but if you look at just all the bearishness that we just had in the past couple of hours of just flag pattern, just watch for it to keep rolling over. And basically that is exactly what started happening. We just started rolling over and basically ended on the session lows for the week. So let's run through and look at some other things. All right, take a look here at sector rotation for the week. XLY and the XLRE ended like the worst of the week. XLY, a big reason why Tesla earnings. I'm not going to go fully deep into Tesla earnings. I try to stay away from stock stuff right now. Definitely will do any of that on the live stream. If you want to come by the live stream, we can talk about that kind of stuff. But I want to keep these more focused on general market. But yeah, Tesla, bad day on their earnings. So yeah, that kind of did not do well. You can see it here on Thursday, nice little gap down here on the XLY, or move lower here, and that was mostly just due to Tesla earnings. Also underperforming materials, industrials, financials, and tech. Okay. Outperformers for the week, well, XLU was in line with the market, the utility sector. Healthcare, communications, staples, and energy outperformed. Okay, staples, you can see not a whole lot of bearishness, not a whole lot of bullishness, just kind of early week bullishness, and then just kind of rode it out sideways. Energies had a nice little pop, and then it'll come back down there on Friday. Definitely was underperforming pretty good there on Friday on the XLE. Communications, though, nice little outperformance, kind of surprising there. I know Alphabet and Meta did pretty good there on Thursday, or at least better than the broader market. Federal Reserve balance sheet data, again, 2 weeks in a row, just went higher. I think I'm going to stop tracking this, mostly because they keep telling us that they want to shrink it, and yet they keep increasing the balance sheet. So I don't know. I might keep an eye on this. If it starts to get crazy, then I'll bring it up. But yeah, I mean, they've told us for months now they want to shrink the balance sheet, but they're not doing it. And then we just had like, what was that, 3 weeks in a row of shrinking of the balance sheet, and then the past 2 weeks they just exploded it back higher. So interesting. Anyways, might not talk about that one too much going forward, just because I don't think it's going to matter. Take a look here at the VIX, and we remember last week the VIX was up very strong going into that weekend. So VIX, still pushing pretty bullish here, or bearish for the market. But I mean, you can see it's getting above that high that it had back in early October, and the SPY and the Qs haven't broken those lows yet. So kind of interesting move here on the VIX. I know a lot of it probably just had to do with last Friday's super outsized move up. So it's kind of interesting. Anyways, nice move there on Thursday up. What's kind of interesting on Friday is while the market was actually negative, the VIX here was actually negative. So it actually rallied pretty good here towards the end of the day to move back up and to close up where it kind of did. So kind of interesting. I mean, the VIX, for how much the market was down, about 1.25 on the SPY on Friday session. You see it didn't really move higher all that much day over day from Thursday to Friday, but that was mostly because, I mean, we were down 0.75% in the afternoon. This thing was actually down pretty good. So we'll see what it looks like going forward. The DXY, the US dollar index, so far it looks like it's still consolidating. This week's action, it still says it's kind of consolidating. Nice little pull down, Monday, Tuesday, pop here on Wednesday, and pulled back Thursday, Friday. Thursday, Friday very much look like Monday, Tuesday. And it is at a point here, though, where it did bounce off of this level. And that's exactly where you wanted it to bounce if you were bullish on the DXY and the dollar. So if you got the bounce, and kind of like how we got the rollover when we retested back over here, late July, and then it just rejected and moved back higher after that rejection. It got the bounce after that rejection. This is where you want to see it continue to go higher. So if it breaks this low here after we got this bounce around 105.545 or so, whatever this low is on October 12th, yeah, I would say probably going to be done for a little bit here on the DXY. So I would even say, even if it broke Thursday's low, I would just probably, be done with being bullish on the DXY for now. Pretty good amount of room down to the 50 moving average here. So, yeah, I can see it taking a longer rest period. Take a look here at the GLD, the Gold Trust. Nice move. Nice move. Last week, it was extremely bullish coming out of that Middle East conflict, and it moved higher Monday, Tuesday, Wednesday. Thursday, a little bit of a settle. Friday, as we went into last weekend, a very strong and aggressive move higher. Came out this week, the world didn't end. A little bit of a pullback there Monday, a little bit of a move higher there on Tuesday. Wednesday popped higher. Thursday moved higher. Friday moved higher. Took out some past several months of highs going all the way back to June. So didn't hold. You see this huge wick. It's moved pretty good here, pretty good distance, pretty good extension here from the moving averages. I could definitely see this thing having a settle out period, probably retest, because we have moved pretty good distance here over the past 2 weeks. And, just wait, just be patient. You don't need to hurry into anything. 10-year yield. Well, I've been talking about this one for months, and can't say that it looked bearish this week at all. Monday, bullish. Tuesday, really bullish. Wednesday, bullish. Thursday, bullish. Friday, meh. No, I'm not gonna say that that's a bearish reversal at all. We just pushed through these two upper wicks. Everybody that's been saying, hey, if yields move higher, it's not gonna be a big deal. It won't last. Yeah, but guess what? It's gonna create enough market turmoil and enough pain that people are gonna have to respect it. And there was some people. There was Solar Edge even mentioned that yields are putting interest rates and yields are putting pressure on purchasing decisions, and if you didn't hear about that, go take a look at Solar Edge, the stock, and yeah, you'll see how bad they got hit. So, anyways, 10-year yield actually did, when it started the Friday trading session, it barely and very quickly wicked up to 5%. Right here, it got to 5.001%. So we did see yields actually hit 5%. So if you do see that in the headlines, there you go. But after that, it basically pulled back the entire Friday trading session. So what's kind of interesting here is, honestly, it doesn't look like anything. It looks like we might pull back maybe early next week, maybe some settle out, maybe some sideways movement. But honestly, this looks like continuation higher. It does. So, I mean, if anything, we moved higher. We broke above these two upper wicks, and maybe we just pulled back and retested into those tops on Friday. I mean, that's kind of the way it looks like to me, and I wouldn't be willing to call this a reversal to be bullish on equities. So, yeah, at least for now, I mean, I could see yields continuing to push higher, and that's going to probably just be problematic for the stock market. Now, as far as that 9x trade that I kind of set up this week, taking a look here on the SPY on Tuesday. Remember, at the end of last week, I said watch out, kind of getting up over, possibility of Thursday's high. Well, the possibility of up to the low and filling this gap from September 20th. So I mentioned that last week. Well, on Tuesday, we pushed up pretty strong, and it was one of those that, we had a nice little gap down there on Tuesday, and we pushed up. We took out last Thursday's high there. You see that, and I kind of mentioned also, if that happens, the SPY pushes up, takes out the weekly high from last week. The Qs, take a look at the Qs. The Qs, let me make that a little bit larger. The Qs, they didn't even get close. And then take a look at 10-year yield. If all of those line up, and you can see the yields here on Tuesday were pushing, like they were up very strong on Tuesday. Very strong, even when, SPY was making a new weekly high compared to last week. So if you got all of those, and I even talked about that on the Monday live stream, yeah, I was gonna probably get in on that, and I did. I mean, once that happened, once I saw the reversal kind of start to set up, I kind of went into that. So that's what I was looking for. SPY, new weekly high. Qs didn't even come close. Yields pushing up, bullish. Yeah, I just went ahead and took it. So, all right, take a look here at the 10 and 2 yield curve inversion. Take the log off, back out here. Yeah, I mean, it looks like we had a very aggressive move on Wednesday and Thursday, especially on Thursday on the yield inversion, on the yield curve inversion. So this thing is steaming for that neutral line, which is basically this big old fat horizontal line here. And when we went back and looked on the live stream this week, whenever this thing starts really ramping up, that is when we start to see bearishness, like real bearishness, very aggressive bearishness on equities. So, yeah, I mean, if we continue up at that kind of trajectory, it probably is knocking on the door. All right, taking a look here at the week-over-week options change, and yep, nice puts being called throughout all the strikes. Definitely more puts being called. Definitely more puts being purchased than calls. So kind of interesting. Even a lot here for November 17th. That was not all me, but wasn't even any of me. So don't even blame me. But yeah, quite a bit being bought there. What was really kind of interesting was, man, the November 24s, which were relatively a new expiration, I believe last week or the week before. I mean, they came out and bought those, and you could just see for the next 7 weeks of expiration. So there was a lot of puts being entered, and so basically going all the way out to the middle of December. After that, not too much kind of going on yet, but yeah, for the next 7 weeks, people were getting very protective. I'm not in one to think that we're just going to like fall off a cliff here. Like down to October lows cliff. Let me clarify that. So let's go talk about that game plan. All right, taking a look here at the RSP, the equal weight SP 500. Yeah, it was holding up pretty good. Monday, Tuesday, but man, Wednesday, Thursday, Friday just got hammered. Came down, took out the lows from early October, and man, that just does not look good. Definitely setting up, and it's going to just continue to go bearish. It's going to be choppy just from the simple fact that there was a lot of support down in this area, so there's a lot of different spots where it's bounced before, a lot of different spots where people are going to try and line up and buy the dip. The DIA, the Dow Jones Industrial Average, very good breakdown that we had in September. Rebound, bounce, retest into this 340 level. And yeah, I kind of mentioned that, a couple months ago. If we take out these two lows and kind of get down about where we did, just look out for the retest. And I mean, it worked beautifully this week. Did not trade this because I got in bearish other areas, but definitely looks like this is probably just going to keep moving down as well. And not really seeing a whole lot of optimistic areas out there. So we'll just have to see how some things set up in other areas. The IWM, this thing got smacked lower, but I've mentioned this over the past couple of weeks. This is not a great spot to be bearish on the IWM. It is in a very good support area that's been bouncing at over the previous year and a half. So yeah, don't look to be bearish here on the IWM. And so I don't know, I have to take a little bit closer look at this one maybe this next week or something. But yeah, I wouldn't be looking to be bearish on the IWM. And if anything, I would actually be looking to be bullish on the IWM and bearish on the Qs. Okay, so if you know how to do pair trading, maybe go look at that, because that is looking really, really good. Speaking of those Qs, those triple Qs, I am very much watching how the Qs kind of interact here, okay? Because the Qs are getting down to that low that it had at the end of September. Remember, it did not make a low in October, but it is roughly 0.9% away from that low spot of September 27th. So I would be very much watching that action, that price action. And we got a lot of big tech reporting this next week. We got Microsoft, Alphabet, Amazon, Meta. So a lot, going to be announcing this week. And Tesla, with its breakdown this week, yeah, Tesla could be moving lower too. So that could be putting pressure on the Qs as well. Now, the SPY is really close here. It basically is a 0.25% away from the low it put in on October 3rd. I'm very much watching which one of these makes that low first. Because if it's the Qs, I would be a little bit more confident saying we're going to continue to push lower. If it's the SPY, I could see us at least rally on the shorter term. And it's going to kind of depend on some things. But if the SPY makes this low, maybe on Monday, and the Qs are not, Qs are looking pretty good, maybe we have a little bit of a rally. But if we get to Wednesday and big tech starts to really drop off, then maybe we will just break through this 420 level on the SPY, 4200 on the SPX. So that is kind of what I'm watching, since we are really close to these lows that we put in not even a month ago. Okay, so that's what I'll be watching there on the Qs and the SPY. And I do expect us to probably break down and probably hang around the 400 level. I would imagine very choppy 400 level over the next 2 months. And a big reason why is basically the monthly expiration for options. The puts are sitting right on 400. That is the biggest strike. December monthlies are sitting right on 400 as well. So the next 2 months, there's a huge put wall on the 400. After that, and I think as we get into the new year, I think that's when we're going to start to see the real sell-off kind of happen. So I think we're going to be bearish probably here over the next couple of weeks, maybe even get down to 390 and then bounce, maybe even quickly drop 410, bounce at 420, drop down to 390, I don't know, bounce back to 400, bounce to 410. So I think it'll just kind of be all over the place here over the next 2 months. But I think for the most part, we're probably going to be seeing a bearish move here over the next 2 to 3 weeks. So that is kind of my outlook. That's kind of how I'm looking for things. If it happens this week, it might be pretty quick early in the week. I don't know. I'm not going to try and play it that way, mostly because I feel like we're already in a move, but we're sitting right on those lows from the early parts of October or the end of September for the Qs. So yeah, it's kind of difficult to kind of say right here, right now, just because it looks like we're in the middle of a bearish move, and we might come out Monday and just continue to push bearish the rest of the week, the whole week. I don't know. If we do that, then I would definitely expect us to go to 410 and then bounce to 420, 4200, and then roll over. Don't feel like you have to get in right here bearish, but right here, I mean, we bounced here before, so if you want to try to buy the dip, it makes sense. Because if we roll over, we'll probably bounce up to roughly this area, and then you can probably just exit out on that retest. Alpha Hunters, have a great weekend. Take care. The weather is beautiful and wonderful outside, and enjoy that football. Alrighty, take care, Alpha Hunters.